I just banked over $6,000 on one trade today, and it wasn't luck, it wasn't signals, it wasn't some random breakout trading strategy. It was by using something that most traders don't understand at all, trend lines. Now, before you roll your eyes like, okay, this is just another trend line video, listen, I'm not using them the way you probably were taught to use them. I don't use them for entries. I use them to hunt liquidity, and it's absolutely a game changer, and it's changed my life. See, retail traders, they draw trend lines to find their support or their resistance. Us smart money traders use them to trap traders and grab their stops, and once I understood that, everything flipped for me, and so did my results. In this video, I'm gonna break down how I use trend lines as targets and not for entries. I'll show you how institutions bait retail traders into these false setups, and how I align myself with smart money concepts like liquidity pools, market structures, and FEGs. I'll walk you through the exact trade I took today, where I entered at, why I entered there, and how I saw the trap forming, and how that trend line sweep went to a 6K payday today. Okay, so generally speaking, when retail traders use trend lines, they like touches on the trend lines because it shows as a strong support when we're thinking about buying, right? So we have one touch right here, we have another touch right here, and then what we're anticipating is to buy off of this. And you're like, okay, we have rejection right here. So people are thinking of buying, right? Me? No. I am targeting that for it to take out the liquidity. I'm looking for this for price to go even lower. So before this low even happens, what am I doing? I have these relative equal lows in my mind already. And this way the smart money thinks is when I see a low right here, price comes down, it creates this low. Okay, I'm thinking in my head right now it's trapping traders thinking that we have trend lines, correct? And so this is an inducement of liquidity for me. Why is it an inducement of liquidity? Because more stops and more buys are being added. Right here, people are buying in here, right? The stop losses are going below here. Stop losses are going below this low, which makes sense. And so now price comes down, right? And people, they see it come here, so they're like, okay, I'm gonna buy right here. I'm buying. So more stop going even more on this low and then this low. And then when people are buying on here, when people are buying, stops are getting put right here. And so now you have a strong trend line. You have a strong level of support, which retailers see. But in my head, I'm like, okay, liquidity is filling up. And then even already, I see that we're on a downtrend. So I'm not thinking about buying on a higher time frame. I'm thinking about going lower. I'm thinking about taking out what liquidity can I take out sell side. What liquidity is there for me to take out sell side? So now what I'm looking for is I'm looking for some kind of change in state of delivery on the said higher time frame. Right now we're on the 15-minute time frame. So me looking for a change in state of delivery, I want to see pricing around, right? I want to see pricing around to go in my favor. So we had our change in state of delivery right here. This run of bullish candles. This run of bullish candles right here. Price came down. And we had our change to delivery in this area. Price came back up for the entry. I'm entering on this FEG and I'm covering the candle. Sorry, that's a buy. Covering this candle, entering on this FEG. Okay, you had a little bit of drawdown. Who cares? Target is going to be what? It's going to be this trend line. And the thing which you have to understand when it being the target of this trend line, price can do this. So say we have our trend line extended right there. Price can do this. It can keep going. And then guess what? Your take profit gets shorter and shorter and shorter. But I'm going to show you a trick for that. So our take profit is a trend line. At least that's take profit one. Take profit one is a trend line. That's what I meant to say. And then don't forget, we still have these relative equal lows. There's still a whole bunch of money right there. A whole bunch of money. So this is where you really make a lot of money from trend lines, is by stacking the trades. Stacking the trades. You might think, okay, he said it's just a target. It's not just a target. This is where you stack your trades and get the most out of your money. Since we already have the change in state of delivery, and now that we have a change of character, and price, we know we're going lower. We know we're taking out external liquidity sell side. So what am I going to do? I'm going to look for a re-entry. I'm going to look for some kind of pullback that makes sense to get into a trade. Some kind of pullback. So you could even go on a lower time frame. So you want to go to the 5-minute time frame. We have a nice FEG right here in this 5-minute dealing range, and it's in a premium for us to sell. So guess what? We're going to put we can cover the candle, or we can cover the high. I'll just cover the candle. And guess what? We're going to have the same take profit. And then this trade up here, we can just go break even. Let that be a risk-free trade, and now we're entering a new trade. So let price play. So now we're inside this trade. And you're like, wow, is that simple? Yes, it's that simple when you know how to execute off of trend lines. Because what people are doing, everybody's buying right here. And what is price going to do? It's going to want to do the opposite of what people are doing. So if everybody's buying right here, putting their stop losses down here, where do you think this price is going to want to go to? It's going to want to take out those stops so it can liquidate and institutions can fill their positions. That's all it's doing. Stop hunting as institutions filling their large positions that are way larger than ours, that are hundreds and hundreds of millions of dollars, billions of dollars, trillions of dollars, or whatever, right? So now we know that price is going lower. And can I say you can keep stacking all the way down to liquidity here. So you can go break even if you want to and then keep stacking. Go break even again, keep stacking. Say you start off risking $1,000. Now with so many stacks, you could be in a 6K risk trade and only risking $1,000, but you have that much volume added because you went break even and you know how to manage your trades. That's a different video. I'm going to do that video soon. So now we want to see price continue to go lower, but people are buying off the trend line and they're like, okay, I see it's respecting the trend line. So you see, even they're getting people that want the retest of the trend line. So it came to the trend line and people are like, okay, I'm gonna wait till it touches again. And they're buying. It gives them exactly what they want. And this is confirmation to a lot of retail traders. And price keeps going down. And full take profit hit. And this was the other stack that I was saying you got into. Me only got into 2 stacks. So cover the candle right here. Target that low. So this is 5R, 4R. So now we're at 9R. That's about 20R. 20R trade of just understanding how to do trend lines. And me, I didn't get the 20R. What did I get? I got like the 13R. I made $6,000 from it just by understanding price. Just by understanding trend lines. When you understand how to use the different retail trader concepts in the way smart money should use them, then that's where you make your money. That's where you make all the money. So remember, there are pools of liquidity on these trend lines. You think price is respecting it? No, it's setting up traps. It is setting up traps, even like right here. So we have, I could go through these examples all day. Even right here, we have this low. We have this. Look what happened. The same thing happened. Price hit once, hit twice. Okay, now we have a strong support level. Price played off this, it went up. And people are buying. Stops all right here. Guess what? Price comes up again. This is where you sell. It had a nice fair value gap right here. Boom. You could take all this money down here. Price comes back up, and then you can keep going. Just understand trend lines. It will save your life. Look, the markets aren't getting easier. They're getting smarter every single day. More retail traders are getting swept out by the same manipulation tactics. But once you flip your perspective, once you start thinking like a smart money trader, the setups then become more predictable and you can see them. I've been studying these methods for years and I'm not just showing charts, I am living them. I've done the work, I've taken the losses, I refined the process. I found my edge using these concepts and now I'm sharing them with you. If you want to spot these liquidity setups and use trend lines the smart way, the right way, or even let my AI do it all for you, I've got something for you. You can either let the AI trade for you and find the smart money concept strategies and setups for you, or if you're serious about leveling up and taking your future into your own hands, then you can book a one-on-one call with me. Or if you're serious about leveling up your trading and taking measures into your own hands by learning the skill, and you want one-on-one mentorship with me, then you can click the link in the description and fill the application out below. I'll show you how to build your bias, structure your day, and snipe your entries, all from a smart money perspective. Either way, don't keep trading blind, drawing random trend lines on invisible buying support resistant line. They only trap you. Learn how to use the market's tricks against them. If you got any value for this, make sure you like, and if you want more smart money concept videos, then make sure you subscribe. Hit me up on Instagram. I'll see you. Peace.